Hello everyone, it's Friday, April 24, and today we will review the charts for the euro and the British pound to identify potential market trends. As you can see, the European currency remains under pressure, a situation that also applies to the pound, which has fallen below the 1.3480-3485 range. This suggests that the bearish market may gain momentum in near term, and the pound's upside potential appears quite limited. Yesterday, traders received mixed data on business activity in the euro area for April. The manufacturing PMI rose to 51.2, while the services PMI declined from 50.2 to 47.4, dragging the composite index below the 50-point threshold to 48.6. These data exert additional pressure on the euro. The UK released similar reports on Thursday, showing growth in both manufacturing and services PMIs. However, statistics did not help sterling hold above the lower boundary of the broad sideways range. On the US front, the manufacturing PMI increased to 54.0 and services PMI also rose from 49.8 to 51.3. These positive releases contributed to a rally in the greenback. Regarding developments in the Middle East, the situation appears to be easing following Iran's seizure of the two cargo ships in the Strait of Hormuz. Although the strait remains closed, US President Donald Trump has tempered his aggressive rhetoric, stating only that if a deal is not reached, the United States will continue its military actions against Iran. These attacks may target energy infrastructure, raising concerns about a potential increase in tensions. The US continues to deploy military forces in the region, indicating the possibility of further escalation in the conflict. In this context, the dollar is extending its gains while risky assets are losing ground. In addition, oil prices have climbed, with WTI approaching the 100 USD per barrel mark and Brent surpassing this threshold. Now let's take a look at today's macroeconomic calendar. It features data on UK retail sales for March, which are expected to show no monthly growth and a decline on a year-over-year basis. Germany is set to release data on business climate, current conditions, and economic expectations for April. These readings are likely to be revised downward as the situation in the Middle East and the ongoing energy crisis are putting significant pressure on the German economy. Later in the day, traders should pay attention to the University of Michigan's figure for consumer sentiment and inflation expectations. However, the anticipated readings are unlikely to provoke heightened volatility upon release. Consequently, market participants' focus will likely shift back to the US-Iran conflict. No discussions or major statements are anticipated in the near term. The lack of news could be detrimental to the market, as rising uncertainty may put additional pressure on risky assets. Therefore, it is advisable to exercise caution with long positions. It may be better to wait for clearer signals before making trading decisions. Turning to technical analysis, the 1-hour EUR USD chart indicates that selling opportunities may arise on false breakouts at 1691 and 1714 or on a rebound at 1736, targeting a move of 20-25 pips. Potential buy entries could be identified on the false breakout at 1.1666 or 1645, while going long on a rebound would be relevant at 1619, aiming for an intraday correction of 20-25 pips. As for the British pound, a rise followed by a false breakout at 1.3480 would trigger a sell signal, potentially dragging sterling down to 1.3446. A break and hold below this level could push the price down to 34.16, potentially open the path to 33.81. At this level, I would recommend considering long positions on a rebound in the event of muted selling activity at 1.3480. Short entries could be placed at 35.14 on a false breakout or at 1.3551 on a rebound, targeting a move of 30-35 pips. Buying opportunities may arise at 1.3446 following a false breakout or at 1.3416, aiming for an intraday correction of 25-30 pips. Good luck to everyone. Have a nice weekend.